Hello everyone, and welcome back to Alaskan Bush People 24, your go-to source for the latest in gold market news and investment insights. Today, we're diving deep into what can only be described as the modern gold rush of 2026. As of January 8, 2026, spot gold prices are hovering around $4,450 per ounce, after kicking off the year with gains amid fresh geopolitical tensions and economic uncertainty. Just last year in 2025, gold delivered one of its strongest performances since the 1970s, surging over 65% to record highs above $4,500. And experts are buzzing, many forecast gold pushing toward $5,000 or even higher this year. Is this the start of a new era for the yellow metal? Stick around as we break it all down, from current prices and drivers to forecasts, historical context, and what it means for you as an investor. Let's start with the numbers. Right now, in early January 2026, gold is trading in the mid-$400s per ounce. Sources like Trading Economics report it around $4,459, while recent sessions saw dips to $4,435 and highs near $4,468. That's still a massive leap from where we started 2025 at about $2,600 per ounce. Silver, gold's volatile cousin, is around $78.79 per ounce, also riding high after explosive gains last year. Why the volatility this week? Profit-taking after the 2025 rally, combined with upcoming US economic data like jobs reports and inflation figures. But the underlying trend? Bullish. Geopolitical flashpoints, including US actions in Venezuela and ongoing global tensions, have investors flocking back to safe haven assets. Add in expectations for Federal Reserve rate cuts, and gold's appeal as a non-yielding hedge shines brighter than ever. To understand 2026, we have to look back at 2025, a year that redefined gold investing. Gold posted its best annual gain since 1979, rocketing 64–66% in some metrics. Key drivers. First, geopolitical uncertainty. Trade tensions, tariffs under the Trump administration, conflicts in the Middle East, Ukraine-Russia stalemate, and rising global risks pushed investors toward gold as a classic safe haven. Second, central bank buying. Emerging markets, led by countries diversifying away from the US dollar, scooped up record amounts of gold. Central banks added hundreds of tons to reserves, viewing it as protection against currency debasement and economic turbulence. Third, monetary policy shifts. The Fed's rate cuts made gold more attractive compared to yield-bearing assets like bonds. A weaker dollar, down significantly in 2025, further fueled the fire. Fourth, investor inflows. Gold ETFs saw massive inflows, and retail demand for bars and coins exploded. This created a feedback loop. Rising prices drew more buyers, pushing prices higher. Compare this to historical gold rushes. The original Klondike gold rush in the late 1890s drew thousands to Yukon, Canada, chasing dreams of quick riches, like modern-day miners on shows such as Gold Rush, where legends like Tony Beets haul in massive paydays through grit and machinery. In one epic season, Beets' team pulled 523 ounces worth $1.3 million in a single cleanup. Today's rush is different. It's financial, driven by macro forces rather than picks and pans, but the allure is the same: gold as wealth preservation in uncertain times. Fast forward to now, the momentum from 2025 hasn't faded. In fact, early 2026 trading shows gold building on those gains. Geopolitical risks remain elevated. Recent events like US involvement in Venezuela have sparked safe haven buying. Unresolved conflicts and potential trade disruptions keep uncertainty high. Central banks aren't slowing down. Forecasts suggest continued strong purchases, with gold's share in global reserves climbing. Interest rates and the dollar. Markets price in at least 2 Fed cuts this year, lowering opportunity costs for holding gold. A softer dollar, amid US debt concerns and global shifts, supports higher prices. Inflation hedge. Even as inflation cools, fears of resurgence from tariffs or supply shocks make gold appealing. Investment demand. ETFs and physical buying are rebounding. Analysts note that after 2025's rally, any dips are seen as buying opportunities. Contrast this with traditional mining. In Yukon or Alaska, miners battle harsh conditions for ounces worth thousands today, At $4,450 Oz, a 500-ounce haul like Beets would be over $2.2 million now. But the modern rush is accessible to anyone via ETFs, futures, or physical bullion. Section 4. Expert Forecasts for 2026, Bullish Consensus. What's next? The outlook is overwhelmingly positive, though gains may moderate from 2025's frenzy. UBS targets $5,000 by March 2026, holding through September, then $4,800 end of year. Bank of America sees gold averaging $4,538, potentially hitting $5,000. JP Morgan, $5,055 average in Q4, toward $5,000 by year-end. Goldman Sachs, up to $4,900 by December. Morgan Stanley, $4,800 in Q4. More aggressive calls, some like Yardeni Research $6,000, while retail surveys show 71% expecting over $5,000. World Gold Council scenarios, base case range-bound, but softer growth could add 5–15%, stagflation-like shocks 15–30% upside. Risks, stronger than expected US data or reduced tensions could trigger pullbacks, but structural supports, debasement fears, diversification point higher. Gold's story is timeless. The 1849 California gold rush transformed America, drawing 300,000 prospectors. The Klondike boom followed, immortalized in tales of hardship and fortune. The 1970s saw gold explode amid inflation and oil shocks, peaking near $850, over $3,000 inflation adjusted today. The 2011 peak hit $1,900 amid post-crisis fears. Now 2025-2026 feels like a new chapter, not physical discovery but financial rediscovery. With prices quadrupling from early 2020's lows, it's the biggest bull market in decades. Section 6. How to participate in the modern gold rush. If you're inspired, here are smart ways to get involved. Physical gold, coins or bars for tangible ownership. ETFs, easy liquid exposure like GLD. Mining stocks, leveraged play, companies benefit hugely from higher prices. Futures options, for advanced traders. Always diversify and consider risks, gold can be volatile short-term. The modern gold rush is on, driven by forces bigger than any single mine. Whether you're a seasoned investor or new to the game, gold's role as a portfolio hedge has never been clearer. Prices around $4,450 today could look cheap if forecasts hit $5,000+. What do you think? Is gold headed to new records this year? Drop your thoughts in the comments, like if you're bullish, and subscribe for more updates. Hit the bell for notifications on the next big move. Thanks for watching.